Hello and welcome to today's daily educational video. I'm your host, Robert Blackwell, and today we will be discussing trading and identifying levels of support and resistance. So, just before we begin, do have a look at the following disclaimer. There is a risk inherent in trading in financial markets. So the content of this particular educational video will be looking to identify and assess genuine levels of support and resistance in the market. So it is often a common question amongst retail traders, particularly beginner traders. How exactly do we identify levels of support and resistance in the markets? Where do we actually place our resistance or support lines? And it is almost a decision down to the individual trader, but we can identify these potentially very valuable lines within the market structure. So let's go onto our trading platform here, and we have a few markets just to assess. So again, the question is, where exactly do we place our levels of support and resistance? Where exactly do you know where to place them? So the first thing we'll do is use our horizontal line tool. We're looking at the euro dollar here. What we're looking to identify is a series of higher lows or lower highs. Really, we know that the high in this market at this particular point is here. So we have already our first level of resistance to the upside. And the reason I say that to the upside is because the market is resisting this trade to the upside. We've seen it one, two, three times we've seen the market bounce off this high. So that is effectively our level of resistance. Then as the market trades down from its initial reversal, we see it develops a level of support. So what does that actually mean in terms of identifying the line? Again, let's use our horizontal tool. Right here at this level, we can see, well, we have a level of support. What we're looking for is this market to effectively, if we're range trading, to bounce off this level to the upside, or if we are looking to break out this trade, we're looking for a consistent break to the downside to potentially allow us those opportunities. Well, the first piece of confirmation we get is this little structure here. It's in and around, and again, these levels do not have to be exact. They're more general areas of consideration. So whether your line is at 122.13 or just a little below, that's absolutely fine. It is more relative to the lower lows, exactly where the market is at right here. And we see that there is one particular time where the market trades and closes below the level. But again, because it reverses immediately up from the level again, the level is held constant and the level of support is still viable within the markets. So that is just one level of support and one level of resistance in the market. What we can look to do as traders, particularly if we're more interested in the short term, is to trade these levels just without analyzing too much fundamentally what is actually happening in the markets. We look to trade these market movements to the up and down side and just for short-term opportunities. Again, we just missed the high here, but the market does move down. And the question really now is, what is going to happen with today's price action? Is the market going to burst to the downside and give us the breakout opportunity, or are we going to see a reversal right up to new highs for a bounce trade from the horizontal range? So there are many offered opportunities actually looking to identify these ranges or support and resistance levels in the market. Let's move across to another market here. We have the New Zealand US dollar. Again, it shows a very consistent structure with the euro dollar. And again, it's because the dollar is trading in such a way over the past, I suppose, year, 6 months more specifically. Again, we see an uptrend. And again, we look to plot the highs and lows of our level of resistance. And again, it's more structured to actually showing us that the level has been broken today, and whether the price is looking to continue to the downside is a question for us technical analysts. We are yet to see today's close, so we're not sure yet. And then tomorrow's close, if it's something like this, that would be more consistent to actually trading the breakout. Whilst if it actually looks to reverse and trade to the upside, something more in this similar fashion tomorrow, that would be again a signal to look to trade this market to new highs, to simply trade the level of support as a floor in the market. So many potential opportunities there. Let's assess more markets here. We have the Euro New Zealand again, something a little more structured. And I'll tell you why. Again, if we look to assess some levels of support and resistance, we have previous highs here. However, within this move, we can see we have many more structured levels of support and resistance from the highs and lows of this markets. So just to name but a few, I'm just placing these in because they're very visible in the market. We can literally see areas where the market is finding it difficult or struggling to actually trade above and below these ranges. So if we think or believe that is the case, well, surely we can look to trade these ranges within the markets just for short-term price speculation. If we are wrong, of course, we will take losers, but that is a part and parcel of trading the markets. But that is okay. We're willing to take the risks in this markets. So just to outline a few levels here, we can see here we have some very strong resistance level given the look at the little consolidation here. We can see the level of volatility just at this level, but the market cannot break to the upside and trades to the downside. And again, we're looking to get something similar again here. So potential trading opportunities here just in trading the range. Again, with the Euro New Zealand. Again, if we look across to the dollar index, we have something a little structured. So there are many ways that you can look to identify these levels of support and resistance. One of them is to zoom in on the price action so that it might be more relative to your type of trading. And what we can do is just look for those higher lows again. And if we zoom out over the long-term structure, we can see that, well, the market has created many floors which have been broken to the downside. We've seen the market bounce and create new highs again. And now we're in this little inflection point just today where we're not sure there's going to be a reversal from this level, or have we potentially looked to trade a much more structured buy to the upside with price action moving. So again, what we'll be looking to do in that case, we know that if the market trades up, it will trade up and is likely or more likely to stop or be resisted at the next level. So here we can see where that level is just by seeing the floor. Again, it's very visible here. If the market were to trade, and I'll just remove this and re-annotate that level. If we were to trade up in this similar fashion, we might see something like this because we know that there's possible resistance at that level and it might struggle to break through to the upside just given the resistance. So always be aware of these levels in the market. In terms of trading, obviously we look for the confirmation, of course, because this market could look to actually drift to the downside again in terms of bouncing from the level of support, resisting this market to the upside. That could be the trade today. We are yet to see how this price action performs. So very indicative in actually looking at potential trades in identifying these levels of support and resistance in the markets. Always look to place the support and resistance levels to the best identifiable opportunities for you, and they will give you the best inclination to where price volatility or to where other market participants are finding these interested trading opportunities in and around these levels of consolidation as well. So that confirms a little more detail in actually identifying potential support and resistance in the markets. I do hope you enjoyed the daily educational video. Thank you very much for joining us here at Forex.Academy. We'll see you next time. Bye for now.